and welcome back to FinSights Healthier Way. I am Naren, and if you are someone who has been scrolling through Instagram reels in the last week showing silver prices hitting the moon and thinking, yeah, should I jump on this silver bandwagon? Then today's episode is exactly for you. You know what's funny? Last week, my friend asked me, everyone is talking about silver ETF. It's the next big thing. Should I put my entire bonus into it? And I said, Ruko Zara, let me explain what silver ETFs actually are. Today, we are going to decode the silver ETF mystery, separating the hype from the real value. We will talk about why SEBI suddenly allowed these in 2021, the massive industrial demand coming in the next 5 years, and how the Fed policy is making silver attractive, and whether that famous gold silver ratio signals a buying opportunity. So let's grab your chai, put on your headphones, and let's dive into the shining world of silver ETFs. By the end of this episode, you will know exactly whether to invest or just watch from the sidelines. Talk about basics. What exactly is a silver ETF and why is everyone suddenly talking about it? Think of it this way, you want to own silver, but imagine the hassle. Where will you store the silver bars? How will you ensure the purity? And what about the insurance? It's like wanting to eat biryani but not want to spend the time in the kitchen for 3 hours. A silver ETF solves this problem beautifully. It's basically a mutual fund that buys physical silver and stores it securely, and you get units representing your share of that silver. It's like having a locker in a bank vault, but instead of a physical key, you have digital units that you can trade on the stock exchange. Now, here's the interesting part. Before 2021, we Indians did not have the chance to invest in silver ETFs at all. SEBI had strict rules saying no, only gold ETFs are allowed. But in late 2021, they finally said, okay, silver bhi chalega and opened the doors. The rules are very simple as in the gold ETFs. Silver ETF must invest at least 95% in actual silver or silver related instruments. The remaining 5% it can be in cash or short term deposits for managing the redemptions. And every unit you buy represents real silver sitting in a vault somewhere. Here's what's even more interesting. The timing of SEBI's decision wasn't accidental. Global central banks were starting to diversify their reserves. In fact, Russia became the first major country to officially add silver to its reserves. They have bought over $535 million worth of silver in just 3 years. When countries start treating silver as a reserve asset alongside gold, you know something fundamental is shifting. Russia's move sent a signal to global markets that silver is not just an industrial metal anymore. It's becoming a strategic reserve asset. This institutional adoption is one reason why silver has been outperforming many traditional assets. It's not just retail FOMO, these are big players moving into this space. Now, before you think, wow, this is a perfect solution, let me tell you about the costs and tax implications. Now, let's talk about the real costs and tax reality check. There are always hidden costs that people don't discuss enough. First, the expense ratios. Every silver ETF charges a management fee, typically 0.5% to 1% annually. This includes fund management costs, custody costs for storing that silver, and the insurance, audit fees, and much more. It might sound small, but over 10 years, a 1% annual fee means you are paying around 10,000 for every 1 lakh invested. Now comes the tax part, and this is where it gets more interesting and frustrating. I mean, potentially expensive. If you sell within 12 months, it's short term capital gains. Your gains get added to your regular income and taxed at your income tax slab rate. So, if you fall under the highest 30% tax bracket, congratulations, 30% of your silver gains go to the government. But wait, it gets trickier. If you hold more than 12 months, it becomes long term capital gains and it is charged at 12.5% tax on gains. Sounds better, right? Let me give you a quick example. You buy silver ETF worth 1 lakh today, and after 2 years it's worth 1.5 lakhs. then your tax will be around 6,250 rupees. So the government is basically saying, हाँ silver खरीदो, but tax थोड़ा ज़्यादा देना पड़ेगा. The takeaway, factor these costs into your returns. Don't just look at silver price appreciation, subtract my expense ratios and taxes to see your real returns. Here's where silver gets distinct from gold. And this is probably the biggest reasons why all the smart money is moving into silver ETFs. Unlike gold, which is mostly about investment by institutions and for jewelry purpose by retailers, silver has a dual personality. It's both a precious metal and a critical industrial commodity. And in the next 5 years, they are going to be absolutely massive for industrial silver demand. Right now, solar panels consume about 19% of global silver production. But here's the kicker. 2030, this could reach 40%. India alone is planning for 500 gigawatt of solar capacity. And not just solar, it also constitutes in the EV. Every EV needs 25 to 50 grams of silver compared to the 15 to 28 grams in the ICE engines. With India targeting 30% EV cars penetration by 2030 and globally EVs expected to dominate, automotive silver demand will double or triple. And coming to your networking, your smartphone, laptop, 5G towers, they all need silver for conductivity. Electronics demand is projected to grow 200% in the next decade. And also, the scary part, we are already in the fifth consecutive year where silver demands exceed mine production. Industrial demand is eating up most of the supply, leaving very little for investment demand. The one more tailwind that is to be considered is the Fed policy. Silver doesn't pay dividends or interest. When US interest rates are high, investors prefer US bonds because they are safer and pay guaranteed returns. But when Fed cuts rates, suddenly that guaranteed 2 to 3% from bonds doesn't look so attractive. When Fed cuts rates, US dollar weakens globally. Silver is priced in dollars, so when dollar weakens, silver becomes relatively cheaper for Asian countries and European countries, which will increase global demand and pushes prices up. And market experts multiple rate cuts in 2025 due to slowing US economy. Each rate cut is like adding fuel to the silver fire. Remember, previously I mentioned Russia adding silver to reserves. They are not doing this for fun. They are preparing for a world where US dollar dominance might reduce and precious metals become more important for international trade. When countries start hoarding silver and retail investors should pay attention. The combination of exploding industrial demand and supportive Fed policy creates a perfect storm for silver. But there is one more factor that we need to discuss, that is the gold silver ratio. Now, let me tell you about one of the most powerful indicators that serious precious metals investors watch, the gold silver ratio. And trust me, what it's telling us right now is fascinating. What is actually the gold silver ratio? It's very simple. It tells you how many silver ounces you need to buy one gold ounce. Currently, it's around 88 to 1 ratio, meaning you need 88 silver coins to buy one gold coin of 1 ounce. Think of it like if gold is 88,000 and silver is 1000 rupees, the ratio is 88 is to 1. Why does this matter? Historically, over the past 30 years, this ratio has averaged around 60 to 67 is to 1. At 88 to 1, it suggests silver is significantly undervalued compared to the gold. Data shows that when the ratio exceeds 92 is to 1, silver beats gold 93% of the time in the next 24 months. But why is the ratio so high? Gold gets more attention as a safe haven during uncertain times. Due to the US trade policies and uncertainty in global markets, the gold is being used as a hedge purpose to invest. And silver industrial use makes it more volatile, scaring some investors. Lower awareness, most people know about gold, but fewer understand silver's potential. Some sophisticated investors use this ratio for tactical allocation. When ratio is high, they increase silver allocation. When it normalizes, they rebalances back to gold. Ratios can stay abnormal for longer than expected. Don't just bet everything on mean reversion, but it's definitely a factor worth considering. Silver moves about 1.7 times faster than gold. When gold goes up 10%, silver typically moves 17%. But this works both ways. During corrections, silver can fall harder too. This higher volatility is exactly why silver shouldn't be your core investment, but it can be an excellent diversifier and tactical allocation. Alright, let's get practical. You are convinced about the industrial demand story, Fed policy tailwinds, and the gold silver ratio opportunity. How do you actually invest in silver ETFs smartly? Consider 2 to 5% allocation within your precious metals basket. Use SIP approach to average out volatility. Focus on low cost ETFs from reputable fund houses. Think minimum 3 to 5 year investment horizon, not quick trades. And monitor gold silver ratio for tactical adjustments. Remember, the best investment strategy is one that helps you sleep peacefully. If silver gives you that comfort of diversification without keeping you awake, it's serving its purpose. If today's episode helped you understand the silver ETF opportunity beyond the hype, here's how you can take the next step. For personalized portfolio advice that factors in your specific goals, risk appetite, and tax situations, reach out to me. I'm a SEBI registered investment advisor and I would love to help you build a portfolio that makes sense for your financial journey. Connect with me via DM me on WhatsApp or Instagram at Finvesting. Visit our website finvesting.com for more detailed analysis. And subscribe to this podcast if today's content added value. Follow us on your favorite social media platforms for daily FinSights and market updates. Today's content is for educational purposes only, not specific investment advice. For personalized recommendations, always consult a qualified advisor. Until next week, keep learning, keep growing, and keep building wealth your way. This is Naren signing off from FinSights Wealth Your Way.